Welcome to Pressure Points. Our topic is the status of the AI trade a whopping 2 weeks into 2026. I'm going to give the couple major updates that we have and then what the focus is that we're going to see later on this month. And the bottom line is that so far, the two major updates we've had have been on the positive side, I would say, incrementally higher than what even high expectations have been. And when you put it together, I think that it's reasonable to expect that the AI infrastructure side of 2026 will finish materially higher than what expectations are currently. And so good news overall, that said, is that the market has not been fully factoring in a lot of this good news. And as a point of reference, is that as of this recording, which is on the 15th of January, the Nasdaq's up 2% year to date, and that compares to Nvidia shares, which are flat, just to give you some perspective. Some of that plus 2% has been bounced by some of these positive commentary, but if you look at the bellwether, still is this kind of resounding skepticism that investors have that Nvidia's growth rate at least is sustainable. So let's jump into the two major updates. The first one we got was on the combination of the 5th and 6th of January. That was a combination of Jensen's keynote and separately an analyst call, along with the JP Morgan fireside chat that Jensen and their CFO did. The two major takeaways from that were, number one, he talked about this $500 billion in cumulative Blackwell and Rubin revenue through the end of calendar 26. And they mentioned that there is upside to that number. That's a major positive, a meaningful positive. Stock actually traded down slightly on that, which I think gets to this idea that maybe investors are already starting to think about what does calendar 27 look like. The second major update from the CES Nvidia was related to the H200s now. This is the kind of the slower version of their most advanced chip, which they're making available to China. And Jensen's comment is that demand is, quote, quite high for the H200 in Japan, so in China. So net of this is positive comments. The stock didn't react much to this related to both the total Rubin and Blackwell, but also the opportunity with what's going on in China. Subsequent to that, we had a Reuters report, this is around the 13th of January, that said that some of the Chinese leadership is asking companies not to buy the H200. So we've got this kind of mixed message that's coming out. Nvidia is saying their demand is quite high, and then we get Reuters reports talking about the Chinese government asking these companies to more favor Chinese chip manufacturers. That is kind of puts the topic of what's the upside related to China and Nvidia a little bit in a gray spot. I was talking to Steve Van Sloan, he's at Deepwater, and I work with him and covering and investing in Nvidia, and he put out a 50-50 chance that we're going to see any sort of H200 revenue by the middle of this year. And I think that's probably representative of where investors are at, is kind of that coin toss. I can say this, that if in fact that the Chinese government has asked companies to not buy the chips, that will likely have a material impact. It reminds me of what happened back in September of 23 when we heard from Chinese leadership not to buy iPhones. The previous year in fiscal 22, iPhone sales were up about 8.5%. Fiscal 23, it was down about 2%. So it did decline. So at the very end of fiscal 23, China came out with that commentary. And then in fiscal 24, the Greater China revenue was down 7.5%. So we saw this decline. Was it related to competition? Was it related to commentary from Chinese leadership about not to buy iPhones? Hard to say, but there seems to be some rhyming to what China wants. Ultimately, a lot of these companies follow. So what's the takeaway? Call it a coin toss. I think that would still provide incremental upside that investors generally are thinking is just that. It's a coin toss. The last and most recent material update to the AI trade came from TSMC's results. They beat their December revenue by 2%, but more importantly, they guided up for the March results to be 7% higher than where the street was at. That means that if they hit the high end of their range, which they probably will for March, revenue will grow 40%. Now that compares to 25% growth in the December quarter and 41% in September. So it goes 41 in September, 25 to 25, back to essentially 40. Now on this news, shares of TSM were up 7%. Seems reasonable. They raised the guidance by 7%, stocks up 7%. We see the shares of Nvidia up 3%. So starting to see some bid. Pretty much 100% of Nvidia's GPUs come through TSMC, and so it makes sense that you'd see that kind of correlation. But that is confirming, kind of lines up with what was said earlier in the month from Jensen and Nvidia at CES, but yet a strong data point from TSMC. So that leads us to what's the next piece? It's always what's around the corner, and that, of course, is commentary from the hyperscalers when they report their December earnings. And we'll get that kind of starting late this month. Maybe some of it might drift into early into February because it's a year end. Right now, as it stands, is that if you look at the 4 hyperscalers that give guidance related to capex, they're expecting 30% growth for this year. I think that for Nvidia to grow at that 50% rate for calendar 26, it probably needs to be 35-ish% growth, so maybe a little bit higher than where we're at. Ultimately, I believe that it's going to be 40% plus, could even be 50%. So I'm going to see ultimately will be 50%. I think that the guidance, the average capex growth expectations, or the growth in capex for calendar 26, I think from these hyperscalers is going to end up being around 40% after they report the quarter. In other words, I think when we finish out the month of January, we'll have 3 solid data points that the AI trade is alive and well, especially on the infrastructure side. That doesn't mean that investors are going to necessarily give these companies credit for all the good news that's going to be coming for this year. But I think as a fundamental investor, I'm most encouraged that we continue to be earlier than what most expect in this AI build-out. Still believe we have 2 to 4 years of strong growth left on the infrastructure side, and the markets to respond appropriately to those higher than expected growth. On behalf of Pressure Points, I'm Gene. Bye for now.